going to go on for another 2 to 3 weeks. What did we learn from his address tonight?
We really got less clarity in this speech than what we had gotten in previous statements that he's made in recent days. He suggested that the U.S. would really be amping up attacks over the next 2 to 3 weeks, but he didn't say that he was going to end the war after that period. He said that the end was close and that he sees this winding down, but he didn't give any firm timeline there, which is a little bit different from what we heard from him just a couple days ago, where he said that the war would be over in 2 to 3 weeks. He also didn't provide any new justification for the war, what goals he was looking for. And particularly when it came to the Strait of Hormuz, he said that that was going to be up to allies, that they needed to gain courage and go take the strait themselves. This comes really, just hours before Keir Starmer, the U.S. is convening leaders from about 35 countries to discuss what diplomatic, military, and other options there are for a non-U.S.-led coalition to go about reopening the strait. That has sort of emerged in just the past day or so. The U.S. was
Yeah, that's right. We still haven't had a direct response. What we do have is this letter from Masoud Pezeshkian addressed to the American people. It's basically outlining Iran's position in the war, that for them it's a war of self-defense, that they didn't start it, that they're a long-standing civilization and they don't intend to back down. But I think more interestingly, the rhetoric really tries to pick on that division between political leaders in the US who are leading the war and the public in the US, which is largely against the war. Iran knows that this isn't a popular war. It knows that, particularly among Trump's voter base, who supported him on the back of promises to not start new conflicts, particularly in the Middle East, it's an unpopular war. And he pointed in particular to petrol prices at the pump, right, a particular point of sensitivity there. He knows that there's elections coming up in the US. So I think really just trying to point to that division in public opinion in the US and make it even more uncomfortable for the leadership.
And the timing of that was interesting because it came after a Truth Social post in which the U.S. president referred to Pezeshkian as the new regime president. But of course, he did exist under the former supreme leader as well. I guess one of the questions that people are still asking now is who is actually calling the shots right now in Iran? If it's not Pezeshkian, then who is making some of these decisions about military, about nuclear, about negotiations with the U.S.? Where does it come from?
Yeah, it's worth saying in general, even in times of peace, the presidency in Iran is not an institution with all that much political power on issues like this, on national security and so on. It's more about domestic policy, the economy, and that kind of thing. The key institutions and individuals to watch would be things like the Supreme National Security Council. The leader of that, Ali Larijani, was recently killed in an airstrike, and his replacement, Zul Qadr, is a particular hardliner, comes straight from the Revolutionary Guard ranks. We know that that institution is overseeing whatever exchange of messages is going on between the US and Iran, so they're one to watch. The other individual, I think, would be Ghalibaf, the Speaker of Parliament. In many countries, that's not an institution with particular power, but in Iran, that gives him a place on some of the important security councils, like the one I mentioned. And we know that he's been important, particularly increasingly important, since the June war last year.
Yeah, well, his posts on X would suggest he's also a keen watcher of financial markets. Patrick Sykes, thank you so much, and Laura Davison, thank you for breaking down the address for us. Let's turn back to markets now. Asian stocks have tumbled as oil prices climb after President Trump's address dampened hopes for a swift resolution to the Iran war. Joining us now is Deepak Mehra, chief economist at the Commercial Bank of Dubai. I guess what the last couple of days have shown us, Deepak, is that it's really difficult to take more than, a short-term trading view around all of the headlines that are coming through in these markets. Anyone who was hoping for a resolution did not get that this morning.
Good morning, Jumana. Absolutely. I think it looks that things are going to get worse before they get better. And clearly the markets are unable to manage this uncertainty. And you can see wild reactions in the markets on a daily basis. So this level of volatility that we're seeing in oil or even in rates where the market started pricing in rate hikes from the Fed and from other central banks was quite interesting to see. And it clearly shows that markets are climbing a wall of worry, and they just can't handle this flip-flop which is happening.
Yeah, I mean, it's difficult to stay on top of the headlines, and I'm somebody who works in the news. You write in your notes that the energy shock of today is different from the energy shock of 2022. And one of the key distinctions here is that interest rates today are a lot higher than they were simply. They were very accommodative around the energy shock of 2022. How do you think that that is going to affect where we go from here in terms of the ultimate inflationary impact?
Yes, so on the face of it, it looks inflationary, and that's what the market was thinking. But it's a very different environment. In 2022, when Russia invaded Ukraine, we had interest rates close to zero, and fiscal policy as well was highly accommodative. So obviously that was a concoction built for higher inflation, and the Fed had to act on it. Today, things are very different. Over the last 18 to 24 months, the US economy has been slowing down gradually. Labor market has weakened very significantly. Wage inflation has eased. And so therefore, today, when energy prices go higher and energy consumption being inelastic, in the short term, people still need to fill up their gas and still need to cook at homes and heat their homes. The consumers will be forced to cut down on other discretionary spending, which means it's like an additional tax on them. And that would then lead to a growth and an economic growth crisis more than an inflationary crisis. So I think that's how we are looking at it, that this could lead to a severe economic slowdown rather than an inflationary bout. And that is why the Fed is still likely to cut rates this year. I wouldn't be surprised if we get 2 rate cuts, but at least 1 rate cut is what I am penciling in for about September.
Interesting. The thing is that the US, from a pure energy standpoint, is a lot more independent than the rest of the world. That's why you're seeing it, much bigger hits and government responses out of Asian economies, out of European economies. Why then do you think the US economy is going to feel such a growth hit?
Oh, the US economy has been slowing down previously. The labor market is weakening. There are structural issues behind that. We know about the K-shaped economy in the US, where the bottom 50% who don't own equities or homes are already under pressure. So I think it will hit growth because those are the consumers under pressure, already reeling with higher interest rates, weakening job market, and so on. And now this comes as an additional burden on them. And therefore, this is a growth scare and not so much of an inflation scare.
Deepak, at the top of the show, I was noting that U.S. markets have actually outperformed other markets around the world. As long as this war continues, do you expect that phenomenon to continue as well, to persist?
Yes, I think U.S. has appeared as a safe haven across asset classes, Jumana. In fact, you look at U.S. dollar, that has been the safe haven of choice, not even gold, not even the yen. If you look at U.S. treasuries, they have outperformed the other government bonds. And then, of course, U.S. equities, they have fallen much less than what European or Asian or emerging market equities have done. So U.S. overall across asset classes has been a safe haven, will continue to be a safe haven because of its energy independence, because it has growth drivers which other nations in the world do not have, i.e. AI and innovation. And so hence, if this war drags on, we will see more flows towards the US and US dollar treasuries and equities will benefit.
Deepak, always good to have you on. Deepak Mehra, Chief Economist at the Commercial Bank of Dubai, joining us today. Now, for a look at some of the other stories we're following. The Trump administration is said to be planning tariffs on drug makers that have not struck deals guaranteeing low prices in the U.S. Sources say companies that don't have agreements with the administration will be subject to 100% tariffs. President Trump has been threatening tariffs on the pharmaceutical industry to cut drug prices for American patients. The Trump administration is also reportedly preparing to overhaul its steel and aluminium tariff policy. The Wall Street Journal says officials are considering a 25% tariff rate on finished products made with imported steel and aluminium. This would replace the current system, which imposes a 50% duty only on the value of the steel or aluminium used in a product. And still ahead, President Trump threatens to exit NATO, but European allies are skeptical the U.S. will actually leave the alliance. The latest coming up. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. President Trump has renewed threats to leave NATO. While European allies are skeptical the U.S. will actually exit the alliance, they still fear Trump may be eroding it at a precarious moment.
And I think it's a strength for the West. It's something we need never to neglect. Is the fact that we are together, we are committed by bonds, and so we need to. There are always tensions. That is not the first time, but we need to solve this as a united alliance.
Let's bring in Bloomberg East Asia government editor John Herskovitz. John, is there a real risk of the U.S. leaving NATO right now?
We have the rhetoric that's heating up. Trump has said that he's considering removing the U.S. from NATO. He's shown dissatisfaction with it, called it a paper tiger. This has been going on for years. We also saw Secretary of State Mark Rubio said it's time to question the value of NATO. This comes in the wake of administration frustration with NATO members not supplying military hardware to help secure the Strait of Hormuz, blocking some access to bases in Europe for U.S. military for use in the war on Iran. But we need to separate the rhetoric from the actuality. When Marco Rubio was a senator, he sponsored legislation which has now become law, which makes it rather difficult for the U.S. to withdraw from NATO. It requires acts of Congress for which there probably aren't the votes for this to actually happen. But the real worry for Europe is that the U.S. could erode NATO from within, withdraw its ambassador, not be there for the Article 5 mutual defense clause, the key of NATO, and also their worries about whether the U.S. will live up to its commitment of the nuclear umbrella, using its nuclear arsenal to help protect nations in NATO. There are only 2 NATO members with nuclear arsenals, Britain and France. Their arsenals are, they're significant, but they pale in comparison to what Russia has, what the U.S. has, and what China has. So all of these are in consideration. There are worries there. The rhetoric is hot, but the actuality is rather different.
Yeah, really interesting context there on Secretary of State Marco Rubio. I will say everyone was focused on his national address yesterday. People thought he might reference NATO, but there was no explicit reference to NATO. Is there anything that stood out to you from the speech, a message perhaps to some of his European allies or allies in the region?
Yeah, I think he was speaking to NATO members and also to countries in Japan. Countries in Asia, saying that they should come in and get their own oil from the Strait of Hormuz, that the U.S. is done, and that they are responsible for what they need to get from this. Now, the U.S. just doesn't get a lot of oil and resources, oil and gas from the Strait of Hormuz. Countries in Asia, Japan, South Korea, China rely on it quite a bit. So I think this is kind of an extension of the frustration that he had that countries in NATO and in Asia, allies in Asia, are not helping his war effort, and saying that the U.S. has done its job in defeating Iran's navy. Now it's your turn to get your resources for your own use. Kind of the transactional nature of the Trump presidency. So NATO wasn't mentioned, but a lot of NATO members and also allies in Japan, allies in Asia, were referenced in Trump's remarks.
Mark Rutte, the NATO Secretary General, does enjoy a good relationship with President Trump. I think that's been widely covered. But beyond him, I mean, how worried are the rest of NATO members about the real possibility of the U.S. trying to leave or disrupt from within, to use your language?
Yeah, I think that the worries are there, and they're substantial. We saw this going on with threats to take Greenland earlier this year. And the nature of the alliance, which has served an enormous purpose in securing Europe, Western Europe, in the post-World War II period, is at stake. And the basic tenets of the Article 5 mutual defense, the nuclear umbrella, and the ability of sharing intelligence, doing military drills with the U.S., having the support of the U.S. military when looking at threats from Russia, it's really concerning to Europe what may happen if the U.S. does decide to find ways to erode the relationship from within. The U.S. actually leaving is another matter, but the threat of erosion is there.
John, thank you so much. John Herskovitz, Bloomberg's East Asia government editor. Now, NASA astronauts have blasted off on a 10-day mission around the moon, marking humanity's return to the lunar neighborhood for the first time in more than 50 years. The U.S. and China are racing to put humans back on the moon, with NASA working to build a lunar base. Bloomberg Tech co-anchor Ed Ludlow reports from the Kennedy Space Center in Florida.
4, 3, 2, 1, booster ignition.
That was the moment that NASA sent astronauts back toward the moon for the first time in more than 50 years. Artemis 2 is a dress rehearsal, first for NASA's Space Launch System, or SLS, developed by Boeing, which generated almost 9 million pounds of thrust when it lifted off from Kennedy Space Center, Launch Complex 39B, here in Florida. Initially, there's this 2-day orbit of the Earth at different altitudes, practicing burns, practicing manual control of the Orion spacecraft before a translunar injection. That then puts the crew on a slingshot around the far side of the moon. 250,000 miles of distance, a total round trip of 685,000 miles, at one point 4,000 miles from the moon's surface. And in that time, The crew on board are going to be practicing maneuvers, manual control of the spacecraft, communication systems, emergency procedures, because Artemis 2 is just one step in a bigger picture plan to return astronauts to the moon's surface, potentially as soon as 2028. That is America and NASA's goal. And it's been an expensive enterprise, $4 billion per launch, a $93 billion program cost. And it's a race against China, who have their own ambitions to land on the moon. They've stated 2030. The crew of Artemis 2 are expected to splash down on the west coast of the United States in 10 days' time. This is Ed Ludlow for Bloomberg News at Kennedy Space Center in Florida.
Well, a more upbeat story for the show today. All right, coming up, emerging markets whipsaw as the Iran war drives volatility. We'll discuss what lies ahead with Luis Costa, head of emerging market strategy at Citi. That is coming up next. This is Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujita report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong.
President Trump dashing hopes for de-escalation with Iran, threatening to attack the nation's electric plants if a deal is not made. Oil edges higher after the president's address fails to offer a clear strategy on the Strait of Hormuz, saying it would open naturally after the conflict ends. And this is Horizons Middle East and Africa. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. I was just thinking, it's been a couple of hours since President Trump delivered that national address. And if you had to distill it down to a couple of words that people are going to remember from the speech, it would be, we're going to take them back to the Stone Age. So that is what you need to know if you're just tuning into the program now, suggesting that military operations are going to go on for another 2 to 3 weeks. But I think there's a real threat of what might happen in terms of military escalation over the coming few days and possibly weeks as well. So as you can imagine, markets are not reacting that well this morning. The handover from Asia Pacific down 2.1%. We'll get into more details in just a moment. S&P futures now down 1.2%. I will say, though, for the week, we're still tracking positive. Remember, the last couple of days, markets have been trading more upbeat on the possibility of a resolution to this war. So let's see how things evolve over the coming days. And obviously, we're entering into a holiday period as well around Easter. Brent 107.50 is where we are right now, up 6.4%. So we really spiked up once Trump started speaking. And that has just accelerated in the last couple of hours, so inching back to $110 a barrel again. And then the USD also benefiting this morning from being a safe haven. We're seeing money going into the greenback, up 0.3% for the Bloomberg US dollar. But let's talk more about some of the price action in Asia. Winnie Su is standing by for us. Winnie.
Anna, as you mentioned, it really is overall a sense of disappointment in markets that we're not getting close to any de-escalation of the war situation. And here you're looking at oil prices higher and hence pressuring the MSCI Asia Index, now down more than 2%, around session lows. Now, as you mentioned, we do have a couple markets closed tomorrow in Asia. That includes Hong Kong, Singapore, and hence for now we are headed for 5 weeks of decline for Asian stocks, and that's the longest since November 2024. Leading losses today, you've got Kospi here down about 4%. But when you look across the board, actually Chinese stocks doing fairly well.